What's happened to Disney? Is it better? Should we be buying it? And it's amazing, isn't it? Go for it.
So Disney's results were really good. Have you got the? Has anybody got the figures? 'Cause I haven't actually got the headline numbers on them, but
I have the headline numbers. I don't have the beat or miss because it's not really something I pay much
yeah,
attention to. I mean, one of the themes I've been harping on this kind of earnings season has been, look, my investment thesis isn't based on the idea that this number is going to be bigger or smaller than consensus in this quarter. I'm interested in where it's going over time. So I've got the kind of headline numbers for you if you like, and I've got
Let's
the
have
bits
it.
of it that I kind of cared about. So revenues were 21.5 billion, which was up 26% year over year. So compared to the kind of same quarter a year ago, earnings per share was $1.09, which was up 36%. Subscriber numbers was the other kind of key metric that CNBC thought they would pull out. That was 152.1 million, which was 31% higher. They added 14.4 million in the quarter. I won't say any more than that for the moment. Those are just the kind of the broad numbers, as it were. I've got plenty more thoughts on it, but that's what we got for some basic numbers.
yeah. So not a record quarter for them because quarter one was actually a much bigger quarter for them. So even though they've added all these subscriptions and what have you, there must have been some slippage in the parks and revenue and what have you, at least from Q1, which I suppose probably includes Christmas. So you would assume that that's why that's a little bit. Disney's on for a record revenue year by a long shot. I think it's probably going to beat its last best year by about 18 or 19 billion, providing they have a good Q4. But I think this was a much-needed break for Chapek. I think he's had a pretty dodgy start to his tenure. He's made a few mistakes, and I think having Bob Iger around, hanging around, pretending he's not involved in the business has not helped Chapek a massive amount because he's been a very well-loved part of the Disney team. So Disney is an interesting thing to look at because it's a company that was sort of snailing around and they've managed to, flip a switch and turn themselves into a bit of a growth monster. I think, like I said earlier, if they can get Netflix-like margins out of a Disney Plus, this is going to be, should be a very good investment for us. Just a quick on Disney Plus. So they've got 152 million subs now. 58 of them are Hotstar customers. I think they're pretty crappy customers, to be honest, in terms of the revenue they generate. There's nothing out of that. Domestic growth is actually slowing a lot. They only added 1 million subs sequentially, 6 million internationally, and 8 million crap onto Hotstar. Content spend 30 billion, 10 billion of that is on live sports, so 20 billion essentially on Disney Plus and other products. They reckon that they're going to continue to increase that spending, so they're now outspending Netflix on content, and they think they're going to go into the low 30 billions next year. So there's potentially going up another 10%. So I was looking into that, and I've been showing the guys a website which I'll link in the description if I remember. But that means that Disney has spent about 7 billion on content for Disney Plus. That bent 7 billion on content. Sorry, lost 7 billion on content, and that was another billion added to that this quarter. So I was looking at what they're going to do, and they've announced price hikes across the board, about 38% being added to the prices, which is a big increase, and this is what tripped up Netflix. So again, to quote Demodrin for the 17th time today, he said that he has doubts whether streaming is inflation resistant, and there's been no precedent, so you can assume that we won't know until it's happened. So in our regard at home, we're probably going to cancel Disney Plus because we don't really watch it, and we've got Marvel fatigue, and they're just going to offer me a cheap deal whenever something Star Warsy comes on that they want me to watch. But I was interested to see that the park rates are not going up, and Chapek says that there's no softening in demand there. Pretty interesting report for me. I thought it was pretty good.
Yeah, it's a wonder where to start, isn't it? Interesting saying you're going to cancel Disney Plus. That's mainly because I don't think it caters to your household as
potentially
as a couple, because in our household it's the opposite. In our household we are looking at our streaming services right now, and Netflix is at the bottom with Amazon above Netflix right now, because Amazon actually has put in a lot of kids stuff. So where if our kids do get fed up with Disney, even though he just watches Spider-Man constantly. Oh, it's just on repeat constantly. He's well gone off Netflix, and anything that's on Netflix can be gathered in small parts on YouTube, which is something you might want to look at as well. Amazon actually has a lot going on, and I think we should give a little bit more time to Amazon, particularly as it's bundled in with everything else that you do. And Amazon has got a really cool strategy there. Netflix is at the bottom right now, and we are having serious conversations about whether we should get rid of it. However, is it recession or inflation proof? I think it is. I think TV in general is. Um, Inflation proof or recession proof, but I don't think individual companies are. So I think this is going to be a very much switcheroo kind of deal right now. I think when something good comes on certain platforms, I think you might hop to it if you're becoming savvy with your money, which I think is what people are going to do over the next 12 months, basically. I think people are going to become very savvy. And what we're going to find is it's going to become harder to unsubscribe from some of these places in an attempt to keep the stickiness. The thing about Netflix, what was so important about it was because no one else had a shine to it whatsoever, its stickiness was so important. And that was a big part of its moat. That moat isn't there anymore. I think Disney is a genuine contender. And coming from Netflix right now, Netflix was obviously the clear winner, the clear leader, and I think that is a lot more murky now particularly after these results, as to whether it is going to be the clear leader over Disney. Because technically, and the lead headline that everyone's gone with is technically Disney now has more subscribers than Netflix if you introduce Hulu, and it is a lot. And like you say, Hotstar is kind of a non-revenue kind of thing. If in case anybody don't know, Hotstar is the Indian side of Disney. We actually here in the UK have Star, and I don't know if that where that comes from, if that's in a separate release of users, or if it's lumped in with the Indian Hotstar, or if it's lumped in with Hulu. But there's a lot to this. It's very complicated, and from what I can see, Disney's very strong at the moment.
It's interesting. The inflation thing, I very much take Steve's view of we're going to see. I thought the Disney pricing stuff that I was reading was quite clever. So like Netflix, they're introducing an ad-supported tier, I think. And the way I saw it broadly was that pricing is going to stay the same if you'll take ads being introduced. It goes up by the sort of 30-ish% Steve was talking about if you want to stay ad-free. Which was interesting to me for a couple of reasons. One was that I was trying to work out sort of what sort of price I thought these ad-supported things might go in at, and it's not like a super cheap get as many people onto the thing as you possibly can. They're sort of keeping the thing where it is, which is
brave.
I thought quite brave. Yeah. Which tells me that Disney think they have pricing power at least.
Yeah. You're going to the same place I was going to go with this. I thought so. Everybody is talking really heavily about how this is just network TV all over again. We've basically got to the point now where it's disrupted network TV. Network TV is over. Cable TV is gone. And now we're all going to be streaming through the internet. So that battle's done. It's over. Long gone. So now we have to develop the same pricing as network TV. And what Netflix and Disney, and I think they've got together here. I think that all these streaming services have got together here and done a bit of price fixing and said, we don't want to go to zero and ad supported, because that is what TV is ultimately. TV ultimately had a zero subscription fee, but it had ad supported revenue. Disney and Netflix have the opportunity to do that, but they clearly want to squeeze a little bit more out of you and think that they can, like you say, with pricing power. I would expect as a millennial, as an elder millennial, I'll go with elder millennial, as an elder millennial consumer, I would expect an ad supported tier to be ad supported only and no subscription. However, I think younger people might go for that, and that's the generational change. And I think they've got pricing power for that reason.
I think that I think Disney thinks it's got pricing power, but I'm not as certain about that as I could
Agree.
be. I don't think any of them particularly have pricing power. I think if we were going to say any of them delivers value for money, you have to say it's Amazon Prime, just because of the deliveries that you get tacked onto it. I think you even get a free audiobook now, don't you, every month as well?
Deliveroo as well.
Yeah, Deliveroo. Yeah, and it's I mean, they've just put their prices up 20%, and they're expecting pretty decent growth to continue on Prime. But I don't think that's particularly expensive either. I think it's £9 a month for Prime, and you get the deliveries as well. That's pretty good.
120 a year, I think, and I don't pay it because I've got Vitality Life Insurance, so I just don't pay it anyway.
Yeah,
because they give it me free, so it's weird.
One of the selling points of Disney Plus and Netflix for me has always been that they don't have ads. So if they're going to say, well, we're going to jump your price up 38%, but you can keep it the same if you have ads, I'd sooner not have it. And I think that's a problem that they're going to have a lot. I think it's just a wrong time to be putting 38% price increases onto people. I think just if they could have waited a year, just for hopefully the Ukraine Russia war to finish and for gas to start flowing back into Europe, and people's energy bills just to come down a little bit.
Surely they can make it like YouTube. Surely they can make it like YouTube, just free with ads. Surely they can do that, and I don't know. I'm not sure.
They could make it like Spotify, so you have to listen to 40 hours of advertising for every minute of music you want to listen to. Make it so egregious that you have to like so annoying that you have to pay for it. But
yeah. Then you have to watch 15 episodes of something else before you can see
exactly.
the show.
Yeah. Want to watch Stranger Things? Here's 2 episodes of Is It Cake?
To Paul's question, though, of should we be buying this stock? I mean, the stuff we've said so far does sort of reinforce my thought of, I want to say instantly yes, right? My gut reaction to this is Disney is one of these companies like Buffett called the inevitables. He was talking about Coke and Gillette sort of several years ago, back in sort of 94 or so. But Disney is a company that I want to say instinctively, yeah, sure, right? You don't bet against this company. And then I sort of dig deeper, and I can see a lot of reasons why this is more complicated than it makes it sound. So firstly, it's a really old business, obviously, and with old businesses we sort of tend to straight line their growth upwards and slowly, and think, okay, so it's not going to grow very fast because it's big and it's old and they ain't going to build any more parks, at least not that many, and you get the general thought here. But it is kind of in growth mode because it's got the Disney Plus thing. And the Disney Plus thing, I'm also really sympathetic, for what it's worth, to the idea that this is quite hard to evaluate because their revenues are up 19% and their losses just go up and up and up and up. It's not like one of these loss-making companies where you think, oh, it's going to make a bit less and a bit less and a bit less and a bit less and then it will tip over into profitability at some point. This is going to be a kind of, I think, Monzo-y-like business where basically it loses money per customer. So as it adds customers, it loses more money. And then the whole thing kind of flips over and suddenly becomes massively profitable one way or another. That's not, of course, a precise number or anything like it, right? I didn't say anything about when it will or how profitable it's going to be. So I can see lots of good reasons about to kind of think, look, this is a tricky proposition to try and evaluate. The shares are now $119, by the way. That's November 2018 prices when I look back across the chart. So if you bought it back then, they did pay a dividend and then they stopped in the pandemic. So you would have got something from now, but you get the point, not an awful lot. And since then, the share count's up 22% and the debt's up 170%, or long-term debt is anyway. Obviously, there's now this Disney Plus thing. They've made a bunch of acquisitions since then. I think Fox was a more recent acquisition. Built out a load more stuff. Is it worth it? I can see sensible room for thinking the answer is no, for what that's worth. And to sort of the point that Steve was saying with his discussion with a Discord user, I know who the user was. Look, it's one thing to think, yeah, okay, they don't care about EPS, but you're entitled to choose what you care about as an investor. And if EPS now is important to you, which I got the impression from the conversation he was having, that this is an investor who thinks it is important to them, absolutely nothing the matter with the idea that you shouldn't own Disney shares in that situation. Because, look, you're allowed to choose cash today companies or companies with very obvious, measurable, kind of easy progressions going forwards. I don't think there's anything disreputable about that at all. And Disney might well not fit into that camp for quite a lot of people. If I'm honest, it's not the company that I have the best explanation of why I own it. It does lean quite a lot on the sort of inevitables thing for me. The previous question that we had was about price targets and so on. I'm not entirely sure what I think mine is for Disney.
Yeah, it's a tough one. You're looking at 2008, November 2018 prices, but we're looking at 2019 level revenue right now. And that's likely to be even higher by the end of the year. They're going to do pretty well. And also, I think it was, late 2019 cash flow, or free cash flow as well. So there's quite a lot going on. And I mean, I hate to bring it up, guys, but Sharpek mentioned the dividend coming back. It's the first time they've mentioned a dividend. Yeah, first time they mentioned a dividend in 3 years. Don't get me wrong, he didn't say it was coming anytime soon, and I agree wholeheartedly that should not happen. They're actually very keen on the dividend coming back once they've deleveraged. So once they've got rid of some of this debt and they've used some of this cash to get rid of it, then they're going to start reinstating for their older customers who, if you own Disney shares prior to 2019, you're probably dead now, right? Aren't you? Like, they were the only people that owned shares, Disney shares, prior to 2019. It was pensions, wasn't it? Pensions and people counting on the income. That was the whole point of it. Is a dividend wanted from Walt Disney at this time?
Well, I wouldn't be in a rush to. I mean, obviously, if it gets paid out, you've got to accept it, haven't you? But I'm not in a rush for them to pay a dividend. I would sooner them get that share count down a little bit, and I would get that debt down first and foremost. It's a lot of debt. It's a lot of debt to add back into the market cap, Disney will be the sort of business in the future, providing Disney Plus turns out to be what we expect it to be. That should generate a lot of cash. So that share count should, it should be quite easy to get that share count down, get that debt down. Because I think, one of the things is that one of the problems is that we're going to have is that Disney is already at 2019 levels with a quarter left to go, but its revenue per share is not going to end up a massive amount more than what it was in 2019, and that's a problem. Steve and I have highlighted that on a number of occasions. When you see shares outstanding going up, if revenue per share, cash flow per share, whatever metric you're looking at is going up faster, don't worry about shares outstanding going up, or at least, don't spend all your time worrying about it. But with Disney, the issue is that, revenue is going to go up maybe 20, 30, 40%, but revenue per share is not going to be massively higher.
I mean, this is a service we provide, isn't it? I've seen like apps and stuff that will tell you when dividends are getting paid and stuff, but follow this show, right? We'll tell you when dividends are like speculatively appearing in the future, because we've got Paul here and he has his eye on a dividend even if it isn't getting paid for another 5 years or something yet.
No, we definitely don't need it at the moment. We definitely need to get that share count down. We definitely need to get rid of all that debt, and it's there though. It was enough to just tease. There was an 8% rise like straight away. I don't know what it ended up on in the end of the day, about 5%, something like that. Very, very interesting. What we'll do, we'll leave it there because we've done that one to death. Noob Investor, we've got a second part of your question coming on a different week, so at least we've got one listener to retain after this. You can stick around and listen for that on another show. But right now we'll leave you there. Any other earnings that anybody wants us to talk about, share our information on, let us know in the comments below. Let us know on the Spotify and wherever you listen to your podcast. And we will see you next week.